The RBI today came out with a policy which was much in line with what the street was expecting. The headline rates were left unchanged, but the SLR was cut by 50 basis points. To talk to us about the RBI policy, we're joined by Dr. C Rangarajan, former chairman of the Economic Advisory Council to the Prime Minister. Dr. Rangarajan, welcome to NDTV Profit. Everybody's saying that the policy came in line with what was expected, but many feel that the statement that came along with the policy was kind of dovish. What's your feeling about the policy today?
Well, the policy is along expected lines, and it is prudent to wait for some time before any decision on lowering the policy rate can be considered. The weather situation is still uncertain. The budget is yet to be unveiled, and therefore, under these circumstances, it is wise to wait and see how inflation evolves. I would say that while the wholesale price inflation has shown some sign of decline and is somewhere near the comfort zone, the retail inflation is still very high. To me, the 2-year period to bring the inflation rate to 6% is too long a period. Therefore, inflation, in my view, continues to remain at a high level, at least at the retail stage, and therefore it's a wise decision to wait for some time.
But the SLR has been cut by 50 basis points. There seems to be, what is being read in this move is that the RBI is comfortable with banks making more funds available for private industry to grow. What do you think this signals? Does this signal that the RBI is assuming that the government will continue with fiscal consolidation, so this will not stoke inflation? Or could this then, or is this not that significant given that this is the lean season and banks are flush with liquidity?
Well, the decision to reduce the SLR can be seen from two angles. From a purely short-term management point of view, and secondly as a long-term reform measure. As you know that in early 1990s, the SLR was as high as 35%, and I brought it down to 25% during my regime. Since then, the changes have been very minimal. But the point is that we are working as a long-term reform measure towards a lower SLR, which will enable the banks to provide a larger amount of credit to the non-governmental sector. That is as part of the long-term reform measure. As far as the immediate situation is concerned, the capital flows have been strong, and if the capital flows continue to remain strong and in excess of the current account deficit, there will be a substantial addition to the base money, and the money supply will expand, and therefore the reduction in the SLR will not necessarily affect the government borrowing program. If the money supply is expanding, the revised figure of the SLR on that expanded base will be high enough to support the borrowing program. Therefore, I take it as a signal towards long-term reform.
Right. Dr. Rangarajan, let's talk about inflation now. The RBI governor has reiterated the target that it had said and the one that you just now mentioned for CPI inflation at 8% by January 2015 and by 6% by January 2016. How sustainable do you think that target is? Is it achievable at a time when the monsoon, one, there is a threat of an El Nino, and second, even the onset has been delayed?
Well, the monsoon is a tricky issue. There have been occasions on which even though the monsoon had set in a little late, the monsoon turned out to be normal. Therefore, we cannot draw any conclusion at this stage about how the monsoon will behave in the next few months. Certainly, if the monsoon turns out to be adverse, or let us say even below normal, it will have implications for inflation. But I do believe that we have enough stocks of food grains at the moment in the public distribution system. Therefore, we should plan early enough to release the stocks judiciously into the market so that inflationary expectations are not built up and inflation, at least in relation to food grains, is brought down. I think there is some backup that is available in the form of the large stocks of food grains. But I do believe, as I mentioned earlier, a 8% rate of inflation, even at the retail level, is very high, and we need to move down. We need to bring it down at a faster rate.
Let's try and understand the key reasons of high inflation. Last year, we saw a bumper monsoon, and yet the food inflation spiked to almost double digits, at least the CPI level. And this year, already the Met Department has predicted that it's going to be a below normal monsoon. So how much do you think is a bad monsoon going to have an impact on the food inflation? Or there are, according to you, some other reasons which lead to high inflation, high food inflation level in the country?
Well, obviously inflation is a result of factors operating both on the demand side and on the supply side. So what you have been referring to are the supply side factors. We have to maintain the overall demand also at a reasonable level, and therefore it is in that particular context maintaining the fiscal deficit at a low level becomes extremely important. Therefore, in the fight against inflation, containing fiscal deficit at an appropriate level is an important element, and one hopes, and this is what we gather from whatever the finance minister has said in the last few days, is that fiscal consolidation is a primary objective of the fiscal policy. Therefore, that needs to be done. Then on the supply side, as I said, food inflation has been caused by multiple factors. Food inflation caused by rise in the prices of food grains can be handled by, as I mentioned earlier, by a judicious release of the stock of food grains. But food inflation caused by the rise in the price of the vegetables or eggs or meat or fish cannot be handled this way because there is no supply, there is no stock which can be released. Therefore, there it is essentially working on the medium-term supply side factors. But as far as food grains are concerned, I certainly believe that we should organize ourselves to release sufficient stocks of food grains into the market in a manner in which the inflation expectations are not built up and inflation is brought down.
Right. Dr. Rangarajan, where do you see rates headed from here? We're on status quo for now. The policy says that, the risk to inflation seem balanced. Does this mean that we can see rate cuts going ahead? Because you said you're positive that the government will continue with fiscal consolidation, but there is hope building up that there will be a push given to growth. There will be, there will be unlocking of this bottling on supply side issues. Where do you see rates then? Do you think that supply side issues will be tackled quickly enough for rates to be reduced, say, in the second half of this year?
Well, much depends, as you yourself mentioned, on how the monsoon will behave and how food inflation will evolve itself. Therefore, I do not think it is possible to predict at this particular point how the policy rate will move. All that one can say, and this is what the statement of the Reserve Bank seems to be saying, that if the trajectory of inflation is along expected lines, that there is scope for reduction in the policy rate. But we need to wait and see. I think there are too many imponderables, too many things which are unknown at this particular point to be able to take a decision. We need to wait and watch as things develop.
What is your call on growth? Do you think that growth has bottomed out? We saw GDP take a 4.7% coming in for FY14. The core sector data is showing a rebound, at least in sectors like cement. What's your projection for growth for this year?
Well, growth should be around 5.5% during the current fiscal. Manufacturing last year was negative. That should pick up, both because of the signs which we have been seen even earlier, and also because of the new expectations that have been aroused in the minds of the people and the entrepreneurs. Therefore, I certainly think the manufacturing growth rate will move up substantially. The one question mark is about agricultural production. Agricultural growth was very strong last year, but perhaps we may not be able to see that kind of growth in agriculture this year. In fact, if the weather conditions turn out to be bad, we may have a very subdued growth in agriculture or no growth in agriculture. But the other sectors of the economy can pick up. Many actions have been taken, and I do believe many actions will be taken in the coming months and weeks, which will boost the economy. On the whole, I think an expectation of a growth of 5.5% during the current fiscal seems reasonable.
Right. Dr. Rangarajan, since we are talking about growth, for 2 years in a row, it has remained below 5%. Do you think RBI is focusing too much on controlling inflation and in some way or the other is losing track when it comes to the growth?
No, I think, you see, there are two things that which have happened simultaneously. The low growth also coincided with high inflation. And therefore, we need to attack both problems. And the Reserve Bank of India, in my view, has the primary responsibility to contain inflation. And therefore, its focus necessarily was on containing inflation. Now, on the growth side, a lot more needs to be done on the supply side, and that can happen only through government actions. Please remember one thing which we have outlined many times, or which I have spoken on the report of the Economic Advisory Council had underlined, is that the investment rate continues to remain high. Even according to the numbers released a few days ago, the gross fixed capital formation rate is about 30% of the GDP. With a normal incremental capital output ratio of 4:1, it should have given us a growth rate of 7.5, but it did not. Therefore, what is really hampering the growth is the fact that projects are not getting completed. There is delay in the completion of projects. There is a lack of investment of complementary projects, investment in complementary projects. Therefore, we need to address those issues. Issues relating to environment, land acquisition have become very urgent. Therefore, what I would say is, at the present moment, if we want to improve the growth rate, let us focus attention on how to get the maximum out of the investment that we are making and attack that particular problem directly and in a focused way.
All right. Dr. Rangarajan, thank you so much for joining us on NDTV Profit and sharing with us your thoughts.